All right, welcome back, mates. Crypto Leverage Trading Group. Everybody's doing well. Hope everybody had a great day today. Obviously, Bitcoin has reversed more or less. We've seen that most of the day today. A lot of talk going on, a lot of chatter, obviously. Bears are kind of quiet. Again, okay, this is what happens. But we're at 44,000. I'm going to do this video right now because I know there are a lot of people that are still in their buy-ups. I think the last entry call that we did in our group on our Discord was at 41,032. Okay. That 41,000 level was the level we called as the bottom, at least based on the charts and technical analytics that we were looking at. And so far it's proved to be solid. That 40,000 level held has proved to be solid. So say whatever you want about technical analytics, and people do. That's where we're at. Okay. And so that was a great trade. Doesn't matter again. There are many different voices, okay, on YouTube and Twitter, right? Doesn't matter what leverage you use. You could use 1x and you're fine. You know what I mean? Like, you don't have to use 100x. You don't have to use 50x, 75x, beat your chest, throw the Hail Mary, like whatever. More times than not, you're going to get wrecked, okay? There are times to use that. There are times to pull that club out of your bag, okay, if you are brand new to crypto, or you're not an experienced option trader, you're not an experienced perpetual trader. Okay, if you're not, then there's a time and a place to pull that club out of your bag. The people that trade it, that leverage every day, okay, in every scenario, in every case, okay, I wish them luck because that's what they're going to need. Okay, if you use the methods that we've been doing, we're looking at it now at 44,000 is what we're calling as a straddle level now. It was 42. Now it's 44. What do we mean by that? You're seeing here on the 4-hour a rising RSI to 65. It's still under 70, okay? So it's not that, it's above its average, about 10 basis points above Bitcoin's average, okay? But it's still, relative to the move, we're under a move underway. We're looking at the 4-hour moving averages of 43,210 or above that on the 7-day. 21-day is lower at 42. We crushed that today. Right, but let's look at the 1-hour. And this is where your concern has to be, okay? The 1-hour has already fallen off of 80 already, okay? Back down to 70. It's fighting to hold 70, okay? A break of the 70 level is going to turn this back down into the 43,000 zone. It'll be a test of the 44,000 the first time since the sell downs of January, okay? A failed test. It's going to fall back down, try and fall back down to support, okay? And so if you're long Bitcoin right now, like most of us, in a leverage trade, you want to do a stop loss in comfort at whatever level you want to get out of. Say it falls back down to 43,500. Get out in profit. You're already well in profit. Or in combination of that, straddle, meaning buy a sell down, okay, at 44,000. That protects your up entry, okay? And so if the market does fall down 1,000 points tonight, you're going to ride that all the way back down. But if your original buy-up leverage was in at 42, you're still up in your buy, okay? You're still in profit, in the money, in your original buy call. But now you've made money coming back down, okay? And now you have two trades, potentially, which normally works out that way in terms of this, if you get it right. You're both up in the money, okay? And you're exiting two trades and you made money both ways. That is realistically what happens when you're on support levels like this. Now, if Bitcoin is to go to 44,500, you're still in the money in your buy up, okay? And you're out of the money, at least temporarily, in your sell down. So you need to mitigate that, okay? That's why it's called a hedge, okay? You're already hedging the profits that you've already made from the 41,000, 42,000 channel in the last 2 days up to the 44,000. So you're hedging it, okay? That's what that means. So that's a protection measure, okay? It's not like you're not doing it to actively trade. You're doing that to hedge and protect the profits that you've already made, okay? And then you analyze each trade then based on what happens on your RSI, based on what happens, for example, if it was to fall back down and break through the 21-day, the 7-day average again, that would be a bearish indicator, and let your sell down run even lower before you exit that. All right, mates.